Welcome back to Crown's Crypto Cave, and good morning. I want to wish you a happy little Sunday morning, a bloody Sunday, or perhaps a very prosperous Goat Jesus Sunday. And first things first, let's get into the topic at hand over here, some Bitcoin analysis. I've been really loving doing these weekly markets wrap-ups. I've actually been considering, instead of doing a live stream during the morning, actually doing like a standalone market update. As I do understand, a lot of people, well, they're not like me who has 2 hours to sit down and look at this magic internet money. So if that's something that interests you, please do let me know if you'd like to see that. And without further ado, let's get on into the good old charts over here. Okay, so Bitcoin. Well, if you haven't been living under a rock for the last 12 hours, then you probably noticed this major red candlestick party being spun off late in Saturday. From me over here in Helsinki, Finland. And basically we have more resolution to the overall direction of this chart. A lot of things are being revealed with this very, 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 very aggressive and intense move to the downside being spun off over here. So let's kind of quickly recap what's gone down in the last month or so. And over here, we got a fresh chart on Finex, and we had been working on, or Bitcoin had been working on, as I am not a Bitcoin myself, but I do like it, a rising channel, which is typically a bearishly resolved pattern. Now, this rising channel not only had the right shape, the right volume, but also significant amounts of bearish divergence going all the way through here. Sorry, my RSI is getting a little bit more finicky over here, a little bit more intense. And this guy was, you could see some severe divergence going all the way from pretty much the midpoint to the end over there, lining up with this guy all the way over here, and culminating in a major breakdown after it did get a little bit front ran from this horizontal area right here. Now, everyone and their mother was waiting for the good old 7550 or 7600 area, your daily 200, and also the 618 Fibonacci retracement, if you were to be looking at it from the more bearish interpretation, which I do believe is the proper interpretation of this, something like this. Or sorry, whoops, that's actually the wrong way to do it. You got to take it from top to bottom if you're going to be doing it, the bearish interpretation. And there we go. You can see the 618 was 7530-ish area. Everyone was waiting for that. Everyone commenting on the internets, guys, I'm going to be shorting at 7550, 7600. It happened before, and now I finally figured it out 4 times later. I'm a genius. But of course, whenever you have everyone thinking the same thing, well, either you get front ran on that target, or you typically get like a fake out to the upside and then bring it back down. And we certainly got the first option in that scenario with being front ran a few bucks, but hitting this nice horizontal right here as well. So it does certainly line up and does, provide good confluence with the technical analysis over here. So with that said, we are seeing, with the advent of this turn down over here, a huge thing coming up in the charts, and that is I'm getting resolution on this yellow 21 and that green 55 exponential right there. For just a split second, they were actually hinting at a positive cross the upside on this very low volume candlestick right here. And this is very important to me because this is one of the big inputs that I know for algorithmic traders, that they're just going to be respecting just based off the nature of their programming. So to see it initially give a small fake out and then be shoved right back down to the downside tells me that, hey, they really want to defend those positions. They're not just going for it. They're aggressively going for it and telling you, hey, this move is about to be real. And that's exactly what we got. Not only that, but this blue 30 simple moving average over here is now is losing its flatness and starting to curl, perhaps in the etchings of curling down, which again, if you're familiar with simple moving averages, this one is the slope of the 30 simple is the most important to me. Yes, the 50, yes, the 10 also matter as well, but the slope of the 30 is certainly the most important. I look at that as the accelerator. And just to give you an idea of how, it's worked in the past, ever since you turn down over here, the slope starts turning down at the same time. So it's like that accelerator effect. It tells you when the move is kind of going to populate and when it's going to become a little bit more intense. Flat lines out over here and actually gets an uptrend over here, correlating with a nice uptrend in Bitcoin over here, which was a pretty damn impressive rally, to be quite honest. Then it flatlines over here and comes back down as Bitcoin comes back down. But you'll notice on this last rally over here, it never got a positive slope. In fact, it just got to flatline. And right before it presumably would have given itself a little bit of a positive slope, it gets shoved right back down once again. So extremely important in giving the overall feeling of the market. These exponentials and these simple moving averages kind of have that like rubber band effect of smoothing out price action over time and getting rid of all the day-to-day bullshit. But essentially you'll notice that they'll kind of be dancing around the price action going all the way ever since the ultimate reversal over here. And as they kind of smooth out, price action starts to gradually increase its aggressiveness to the downside. And that's why these markets do take some time, as the bots and the algorithms that are programmed with these sorts of inputs in mind, they have to work around this and slowly grind it down. So always be thinking of that rubber band effect. Okay, cool. So with the advent of this, I do believe that the best or the most pertinent way of interpreting these charts is, well, we have a very obvious horizontal right here, and we have an extremely obvious descending resistance trend line coming in right around here. And when something looks like this, you have what's called the good old, or perhaps not good old if you're bullish right now, a terrible thing to say on a Sunday morning, descending triangle, which does imply a more bearish resolution of this. You'll notice that this point over here is actually sticking out under. That was Bitcoin's real chance to actually, this last rally over here, sorry, the second to last rally over here was Bitcoin's, in my opinion, real chance to kind of dig itself out. You'll see this a lot of the time where, you know, the price action will kind of just briefly go below a major support and then pop right back up on the next candle. That's actually an incredibly bullish sign. And this rally was pretty damn impressive, you know, looking at the volume on it. And actually this is coming up to the next point, just, you know, going off a few more reasons why this rally was not too impressive. The rally that we had over here, and I do understand I'm kind of jumping around all over here, but please do bear with me. It'll all come together soon. This rally being spun off over here on August 23rd, extremely light volume, kind of digging you out of this rounded off bottom over here. And followed up with just even lighter volume. And you'll notice that the higher volume candlesticks are the selling ones actually. And again, when you get resolution on that pattern, you get full volume kind of pouring back in. But to compare this past rally with this guy over here, you can see very easily and obviously that this rally had a lot more punch to it. It had a lot more back into it, a lot more volume, which again gives us, you know, our measurement of participation and conviction within the market. That rally, in my opinion, could have been Bitcoin's real chance to dig itself out. Again, not only because of that, but because of the way that it was, you know, briefly spiked below that support and then was brought back up the next candlestick. That's an incredibly bullish sign. And the fact that this rally failed spectacularly after just testing the 200 simple was pretty much, in my opinion, a very, 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 very strong signal that Bitcoin is likely to come back to its lows. Even after this reactionary bounce over here. So that's exactly how we've been kind of viewing this. If you've been tuning these streams for, you know, the last few weeks, we've been viewing this last rally over here as likely to be sold into, and that's exactly what happens. And I'm not saying that to come off as any sort of like arrogant ass or anything like that. That's not my intention. My intention is to share how you can understand this and share how you can do it yourself, so you don't get caught in some red dilly party like this, as that's not fun to wake up to on a Sunday morning. You want to wake up on a Sunday morning, go to pray to goat Jesus. That's what you want to do on a Sunday morning. That's exactly what you should do on a goat Sunday morning, and that's what I'll be doing on a goat Sunday morning. Anyways. Okay, so let's go over here to the weekly. Weekly is telling us a few things as well. So the weekly over here, you can see made a try at that yellow 21 exponential, actually trading a little bit higher on this current weekly candlestick than the prior by a few bucks. And then is now presumably going to close later tonight at 8 p.m. Eastern Standard Time below the low of that prior right there, which would actually be a bearish engulfing candlestick. And not only that, but a little bit more important, or just as important to me, a bearish engulfing is always important, right? But just as important to me, the yellow 21 exponential looks like it's rejecting price action, which to me is always a litmus test for the like shorter to medium term trend with regards to that time frame. So a weekly is always very, very powerful. And to get rejected from there is telling me that, again, the bots and the algorithms are on the sell side defending that area knowingly, because if they do get that cross, the 21 cross on the downside of the 55, that is likely to just intensify that good old algorithmic selling, which I always come back to because I want to nail it in your head, or at least nail it in my head, that it's not some sort of like magical, mystical, Harry Potter type Hogwarts bullshit that these things work. No, it's because of the way that they're programmed into the bots and the algos that run the market, essentially. So they kind of give up their hand by showing where they are indeed defending and where they do want to attack. And as you can see, a major attack right here after Bitcoin was trying to kind of crawl its way back up, creating essentially what looks like a three-line strike to me. Although perhaps not perfect. Not too heavy volume on this selling, I should say that. But more importantly, the only other time, Bitcoin's only had one other cross of the yellow 21 to the downside of the green 55 in the almost 10-year history of Bitcoin. And that was, well, this is not the best example over here because it doesn't go back too far, although you do have that example. It's right here in 2014. No other time in Bitcoin's almost 10-year history have we gotten this. And in a very similar fashion as well, you see Bitcoin is kind of consolidating along around the 100 exponential, and then boom, down to its ultimate capitulation graveyard. But then it rises like the phoenix to the goddamn sun. So my point is with this is that, hey, you can't analyze historical analysis one-to-one, and this is why I just fucking hate this word fractal. It's for whatever reason it's only in cryptocurrencies. Like I come from a background in as being a market maker in equity options. I've never heard the term fractal before in my life, and I understand what people are saying, but I don't like what it implies in that you're analyzing historical movements one-to-one. That's very misleading. Although I've seen it being touted a lot, it's extremely misleading. What you can do is you can look at the indicators and look at the overall shapes and relate those, but it's not going to be perfect. It's not to be one-to-one. As markets mature, they evolve as things change, as there's so many variables in this game. But for right now, to me, again, slope of the 30 simple moving average, continually grinding it down. Clear rejection off the yellow 21, likely to cross. If Bitcoin does not close the next week or two above 71 to 7,200, it will get this 21 exponential cross to the downside of the green 55, and the 100 exponential is kind of like the last line of support before the big bad, the ugly drop, most likely in my opinion, which would line up with the narrative of the descending triangle perspective of this. I will share a more bullish narrative in just a second, but this is what the bears would be looking at. You got a descending triangle, very, very simple. You got your last line of support right here, weekly support right around the 100 exponentials, 5,900. If you break that, well, if you break it, you buy it. No, just kidding. That's a terrible. You can't say that. You break it, you buy it. Well, not in trading. If you break it, you sell it. That's how you do it in trading. And you can see over here that the volume profile does certainly agree that the last high volume node is kind of holding it up from this area right here to about 5,800, 5,850-ish area, depending upon how close your eyes get into the charts over here. After that, you'll notice that there's a very, 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 very low volume node right here. Absolutely nothing holding it up between, the low of this guy at around 50, you want to call it like 57, 5,800-ish, all the way to the top of this guy at around 48-ish area. Which would actually directly align with this area over here. Just beautiful confluence in the market. Sorry, I'm trying to get this just about right, and there we go. And it's just kind of aligning with this area over here, agreeing, saying that, hey, we had a lot of business being done there before, a lot of back and forth, which typically does build up a nice structure to, at the very least, bounce off of. Most likely, again, you can never say anything is 100% in this game. It is certainly not, but it would be a high quality trade. And the fact that there's just nothing going right over here is, you always have to wonder, right? And that's kind of the problem with going to the moon. It's fun when you go to the moon. It's fun to get in the rocket ship. It's fun to put on the gloves and the helmet and all that kind of stuff and float around in space mon. But you don't build up any support on the way up. When you just go up essentially vertical like this, there's no support being built up. And you'll notice that when the market actually does reverse over here, you come down in this nice stair-step fashion. Well, that's actually kind of like building a foundation over time, coming back and filling in the blanks, basically building that foundation so that if Bitcoin were to reverse, now it actually will have some support built up, in this area. So if you are looking for the icing on the cake, and if you are a long-term believer in Bitcoin, which I am, this is actually, in a way, for a long term, again, not right now. If this doesn't mean buy right now, not that this is financial advice or anything like that, but it's kind of a good thing for the long term if Bitcoin were to rally back above it again, because then you'd have all this, sideways action being put in as support over a long period of time. Beautiful, absolutely beautiful. Now I'm gonna go over here to, oops, let's get that off. That's for later. Don't look. The monthly over here, and the monthly is pretty damning as well. I believe that we can clearly see the market cycle in the monthly now. And very quickly, I just want to talk about the importance of the yellow 21 exponential on the monthly. Again, I come from a background in equity options, and I'm very much used to looking at the higher time frames because, well, those things, they have like decades of information. And the 21 exponential on the monthly is kind of like your litmus test for generally bullish or generally bearish. And if you want like the technical analysis standard definition of a bear market, it's actually when the monthlies start closing below the 21 exponential. As you can see, we actually haven't done that. Or Bitcoin hasn't done that since 2014. So here's the market cycles, and why is that even important? Well, you spin it off, you take yourself out of this accumulation phase over here from 2014, beginning of 2015, you start rallying for basically 3 straight years, just straight up, just above the yellow 21 exponential. And by the way, you'll notice that this bull market does correlate with a major break on heavy volume of this yellow 21 exponential, and culminates in a pair of reversal tweezer top candlesticks over here on heavy volume, and then you got the fall through right here. You create some sort of a consolidation triangle right here, get shaken out and resolve to the downside right here, and then a very low volume kind of hang around this yellow 21 exponential as we continually test it, which is not a sign of strength. If the saying goes with strong support is that it only needs to be tested once. Now, of course, I don't expect this to be just tested once, but the fact that Bitcoin has kind of been continually coming back down here, and actually do consider this a test of it as well, 1, 2, 3, 4, 5-ish times now, just leads to the explanation that it's more likely to break. Again, another little tidbit: the more a support is tested, the weaker it gets. And same thing for resistance. The more it's tested, the weaker it gets, as the buyers and sellers use up their ammo, essentially. And they, assuming that we're in a rational world with limited finite resources, you're gonna run out at some point in time. And if this yellow 21 exponential were to break, and by the way, it is certainly losing its slope over here, as you can see it start to curl, this blue 30 simple moving average would start to align and act as like a magnet for price action, is the way that I think about it. And that's coming in around 4,300. So do we have any other things lining up with this? Well, if you go back on over here, well, you already know the answer to this, but hey, again, so if we're going back over the whole kit and caboodle, I can't believe I just used that. You'd see that the volume profile saying you got nothing doing in this area right here. So that would kind of be agreeing with the 30 simple moving average coming in around 40, mid to low 40,000s. But what else do we have? If I put on my drawing tools over here, I've already drawn it out, and I've reworked this dotted line. It's a 10-year logarithmic trend line. I did not have it perfectly aligned with this, and after going through it with the fucking microscope, I've decided to change a few points, and you'll notice now that the intersection of this 10-year dotted logarithmic trend line actually intersects perfectly with this horizontal trend line, and also this 200 exponential, this purple line right here, all in this area right here, also intersecting with this logarithmic downtrend line right here, which by the way is where Bitcoin did kind of bottom off in a similar fashion in 2014, right over here. So that would be the first big area. Oh, also it's your 786 Fibonacci retracement. So a bunch of different things coming in there. Again, volume profile, horizontals, 200 exponential on the weekly. Also the 786 Fibonacci retracement, logarithmic trend line from 10 years ago, and this downtrend, and also confluence with the 2014 area. Also, if I were to just extrapolate this down, you'll notice that it's about an 80% drop. So just let's see if we align that with anything over here, if this would suggest that the end is perhaps near. And you know what? This would actually be saying that a 70% drop for Bitcoin over here, an 80% drop would actually be somewhere right around here. So kind of in the middle of capitulation. So perhaps it's getting close. Now we'll talk about another idea in just a second over here. But I did quickly want to talk about that. And you can kind of see it down here. And let's actually go through it first. Let's see. I guess I just got to do it this way. The old fashioned way, just back it all off, as this is very important. So over here on Bitstamp, right? I'm going to put you back on the daily. And Bitstamp is a little bit interesting. I haven't been able to recreate this on other exchanges, so this is with a grain of salt, as the saying goes. To me, this could be interpreted as a bear flag right here. You have 1, 2, 3 touches on the upside right there, and you got 1, 2, 3 right there. And actually, it's broken. Nice parallel. It's quite thick, so again, this does throw me off. But essentially the narrative is the same, because you could also be represented just like we were a week ago, or like this, or whatever it was. Anyways, so sorry, that'd be like a few weeks ago. Anyways, the volume profile would be right on Bitstamp. I've not been able to recreate this on other exchanges, so again, take it for what it's worth. But let's just play around with some ideas over here and see if it lines up with anything else. And I'm going to put a measure move on this guy, which actually technically has been confirmed as of the advent of last night's price action, and it actually points us directly right down to this horizontal area coming in around from this area over here. Lots of volume being done, nice sideways action, and look at that. It would also be the intersection of this horizontal and this logarithmic trend line over here in the blue box territory, which is where the 886 Fibonacci retracement is from the ultimate high of the ultimate low of the last market cycle, which, by the way, is actually exactly where Bitcoin bottomed off, like had the spike capitulation low in 2018, the 886 Fibonacci retracement over here. So again, that was a very quick spike, and you'll notice that in 2014, Bitcoin did accumulate in this zone right here, which was the 886 Fibonacci retracement and the 786 Fibonacci retracement. Also, you'll notice in that range, kind of agreeing with that idea, is this red 200 simple moving average on the weekly is likely to kind of curl around in there and hook around as well. What else do we have? Okay, so, oh yes, also the volume profile, I believe, should be showing something around there. Let's kind of pull this one out once again. And yeah, you'll notice that this thick volume node over here is actually encompassing that area just about perfectly, 2,300 to about 3,000-ish area, which, again, right in this area. Also, if we take this off and we do the same sort of extrapolation saying, hey, what if we just kind of measure this one all the way down to the ultimate capitulation low? That's 86%. But what if we did the same thing for this guy over here? Again, just taking it to the measure move, and look at that, 87%. Not bad at all. So again, we have a lot of things kind of pointing in the same direction. Now, I would like to give the bullish view, just to be for purposes of thoroughness over here. And here's what we got. We have, whoops, well, that's nothing right there. Jesus. All right, here, let's try this. Let's put on a 3-day, and you could look at this, or at least I would imagine that the bulls are looking at this as some sort of a falling wedge formation, which is typically a bullishly resolved pattern when you're talking about statistics. But again, I absolutely hate wedges. They're my least favorite pattern to trade because you get a lot of fake outs like we had, just a few weeks ago. The right way to do it was plotting these 2 points, then he broke out over here, then just got shoved right back down. Just hate them. Just absolutely hate them. Anyways, but this is technically still the right way to do it. You just redraw, and that's what makes it frustrating. You can just redraw, and it's still completely fine. The volume would not line up for this, though. You don't want to see volume increase in a falling wedge as it gets more and more mature, especially on the sell side. As what does a wedge imply? It's implying, shaking out the sellers. Well, if the sellers are intensifying their pressure, it doesn't quite line up then. But fair enough. This is what the bulls would be looking at over here. As long as you're kind of living above this 200 simple over here on the weekly, the 3-day, generally okay. Although, again, I am kind of having to squint my eyes and turn my head and, make it work. But hey, that's what I'd be looking for if I'm bullish. And of course, you'd have a breakout confirmed if you start closing 3 days above 75.50-ish area. Okay, so back now over here to our other chart, and I want to share with you this Bitcoin MVT signal. If you're not familiar with it, it's very unique in the way that it's not derived from price, volume, and time like all of our other indicators. It's derived from the network value divided by the 90-day moving average of the daily transaction value, which is damn good at calling these tops, is what it means. 2013 called it perfectly. End of 2013 called it perfectly. Bull trap of 2014 called it perfectly. End of 2017 called it perfectly. And then now we actually, just a few days ago, Bitcoin was at the third highest time, basically second highest time, that it ever had been on this, hinting at a very similar scenario that we had in 2014 with this bull trap over here as well. So I'm looking at these and I'm thinking to myself, this has a lot of historical accuracy. It's pretty damn good. Whenever something calls it this well, I pay attention. I definitely pay attention. So that is certainly on my mind. I also want to share with you. Let's go look at the longs and the shorts over here on DataMix. Or sorry, this is Coin Farm. No, I want to go to Data Mesh over here. Yeah, there we go. So we have about, what is it, 35,500 shorts versus 23,500 longs. Shorts are starting to pay a little bit more in their funding. Not too much. It's not until it gets around like 0.05% that it starts to be a big deal. And above is where it starts to be a big deal. We got 6,000 of those guys hedged. By the way, a lot of people were talking about this last week. A lot of people arrogantly posted on Twitter, guys, there is someone, or all the retailers, all the dumb money is shorting right now. Well, no, this is very unlikely that was a scenario over here. This scenario over here that we had with this 10,000 to 11,000 coins being put up in the span of about an hour or two is to me indicative that it's an entity, because only an entity with extremely deep pockets could do that sort of thing. Retailers getting together, pulling together their $10, $20. No, of course, like no, $10,000, $100,000 here and there. Like it's just it ain't enough. You need deep pockets, like $500 million, to put up something like that and be okay. And you'll notice that, all the people on Twitter were saying, we're going to squeeze them. We're going to squeeze these shorts. No. When the market cycle and the market phase actually shifts, the longs and the shorts take on a new interpretation, and the shorts will naturally have a higher equilibrium. They'll naturally just find a greater ratio by the nature of that shift in market dynamics and markets, sentiment, to reflect that. Now I'm just kind of posturing up ideas over here. Obviously, no one knows this except for the people who did it. So I just always want to say that, I'm not saying that this is exactly what happened, but this is what I would think would happen. If I were putting myself in the shoes of someone like that, it's likely because I had a lot of spot long positions, and you'll notice that in Finex. On Finex, a couple of weeks ago when the rally was first beginning, there's a lot of hidden orders being filled around 6,250, 6,400, 6,650, 6,700, 6,900, and then I think like maybe 71. And a lot of coins were absorbed over there spot long, meaning not done on margin. And then you see this huge margin short go up around the 72 to 7,300 mark. Price action was right around there around this time. And everyone thought that, it was just some stupid retailers getting short when Bitcoin's about to break out. Well, of course, the rally was already pretty damn weak. You're in a rising channel. You're in all sorts of bearish formations, blah, 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 blah. But more importantly to me, that's indicative that perhaps this person was covering their spot long positions, because it gives you very, very good options when trading going forwards. You could, if price action starts, because that price action is approaching a major resistance that everyone's talking about. So, if it gets to that area and if it surpasses it, basically confirming a bull move, well, you can just take off your margin short position, take a little bit of a loss, and and have your long exposure again, because that it's likely to go up a little bit more. Or at least a little bit more. By the same token, you can cover them right there, at 70, 72 and 7,300. And if price action does turn down, which I think was the more likely scenario, which we talked about, then you can just sell your spot long positions, be covered on your short margin, so you're already short there, and then you're just adding fuel to the downside while taking profit on your spot longs, and now you have short exposure. So it's just a beautifully set up, beautifully executed, and whoever did that, definitely a great trader. So high respect for that person. You'll also notice that there's really actually, now the shorts are starting to come down. So to me, the current price action with these shorts coming down, we've lost about, 4,000 to 5,000, is indicative that, hey, this bounce over here is just shorts closing. It's not necessarily like real buying. It's just bear flag after bear flag. And perhaps if we break this area, it's just going to be another bear flag. So again, I'm looking at this and I'm thinking to myself, wow, this is quite intense. And again, the buyers are I don't see buyers showing up just yet. I see shorts closing, which is not how I want, a market shift to happen, or at least not how I see them happen in my experience. But again, these cycles are long periods of time. They take their time. If you're coming from traditional equities, they can take 10 to 20 years for a full cycle, whereas cryptocurrency, 5 years. It's great. So at the end of the day, everyone's getting a major life-changing experience over here. And if you can just stay in the game, will serve you well, my friends. I'm going to go quickly over here to BitMEX data. This is the BitMEX longs and shorts. You'll notice that it's 25% in favor of, it's 75% versus 25% in favor of shorts, which is extremely high. You'll notice that this changes around a lot, but also there are limitations with this data. It only incorporates people who do like the slash position command on the troll box. So it's not necessarily all inclusive. And in fact, you'll notice that a lot of these people have pretty damn small positions overall, 1,000, 100,000, 10,000, very, 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 very small. But hey, worth talking about. Perhaps it is a good average. We don't know. And I would imagine that the shorts are paying long for funding. But fair enough. I think that's probably going to do it for today. Oh, I quickly want to go over here and check out Ethereum, Mr. Buterol. Whoops, that's not I don't want to check out the ratio. I want to check out the USD pairing and just breakdown after breakdown. Again, the big news was last week when the symmetrical triangle right here that we've been watching for, about a month got broken and confirmed to the downside. Huge volume pouring in as you confirm the breakdown. Hit the first measure move, flagged out, and then made another move to the downside, hitting 185. Jesus Christ. I did not see that last night. I must have been asleep for that one. But essentially, I have Ethereum out here in pretty much no man's land. I don't really see anything holding it up. I see the next big support is around 160-ish, 158.5, something like that. So again, the weekly is even more damning in my opinion. Just looking at this is pretty much all you need to know as a trader. Just would you buy it or would you sell it? This is distribution over a very long period of time. And I think with that, I'm probably going to start taking off this video. Oh, let's talk about some more lower time frame trade ideas, as I do quickly want to cover that. Okay, so we are currently resting on a support right here at about 61.50. Of course, I didn't even talk about the overall support down around here. This is the last line that really needs to hold 50. What is it, like 59.50? That technically needs to hold. Also 58. Well, you could also make the argument that it should just be 58.50. Yeah, we'll call it 5,800 even. Just make it more slap in the face. Yeah, if you break 5,800, it's very likely that you do accelerate down below the very, very fast through the 5,000s. You're currently resting on one over here. What would make me change my mind? I always want to be asking myself this question. What would make me not want to be short? Because I am short in position right now, not only in stature. But what would make me not want to be short anymore? Well, if Bitcoin started closing dailies above this area right here, or at least like 2 hours above 6,600-ish area, I would reconsider my position. Although technically speaking, you could get all the way back up to about 6,900 and still be very, 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 very bearish overall. So I think that's going to do it for this lovely Sunday morning. I hope this video finds you well. I'm wishing you a happy Sunday morning, happy Go Jesus Day, and I'll see you guys soon. Take care.